All right. All right. Welcome into the stream, everyone. We have an amazing group of guests here today, both Ryan and Cam from the research teams of Bitwise. Before we jump into that, how are both of you doing today?
Doing great, great, amazing to be here. Yeah, thank you
Glad to
so
be
much
here.
for the invitation.
Oh, I love it. I love it. I'm super interested to have more of a conversation around the amazing stuff that's been going on at Bitwise. Always incredible to see some of the crossover between institution as well as on chain, an industry we all love. And if I'd love to make sure I'm clear on this. Ryan, Cam, you're from two sides of the house looking at the same funds, right? One on chain and then one from the institutional side. Maybe you guys can break that down for us so we understand kind of the two lenses you look through.
You want to start, Ryan? Or?
Yeah. Happy to lead off. Yeah, I think that's exactly right. And thanks for having us. We're really excited to be here and talk Avalanche and Bitwise. I joined Bitwise back in 2021. Was focused on DeFi at the time. Now I lead our US research efforts, and a lot of what I do is focused on the institutional track and institutional channel. So working with professional investors like RIAs and financial advisors and family offices to help them gain exposure to all the different opportunities that crypto has to offer. And there's a bunch of other things sprinkled in there that we do day to day. But Cam certainly is helping drive all of the on-chain related research and implementation on that side of the business. And I'll let Cam introduce himself.
Yeah, no, thank you so much for inviting us. So yeah, I'm managing the research team at Bitwise On-Chain Solutions. So Bitwise On-Chain Solutions is a team of 50 people. We're focusing mostly on blockchain infrastructure, and we offer services such as staking. So on the staking side, we've been around since, we've been doing this since 2018. So it's like 8 years managing blockchain infrastructure at scale. We're running more than 25 networks. And really, what we're doing at at Bitwise On-Chain Solutions, in terms of clients and type of users, it starts with retail users that have a crypto wallet that know how to stake on chain, find Bitwise as a validator and decide to stake, through foundations, crypto VCs, crypto liquid funds, banks, crypto wallets, crypto exchanges as well, and also ETFs and ETP providers such as Bitwise. So yeah, on the research side at Bitwise On-Chain Solutions, so it's really about looking at the new networks, try to find the interesting opportunities for us to run some validators, to run some infrastructure, and then once we onboard the network and run the infrastructure, it's really about following what's happening on the chain itself, understanding what are the protocols building on the top of the chain, and try to, be involved in governance, try to provide some insight and data for our clients and for Bitwise.
Yeah, that is amazing to hear that the number of layers that you cross up with and how much infrastructure has been put in place even in the industry over these years. Just hearing that many things available on chain feels like a whole new chapter, and it really is. And Bitwise is proving that. I'd love to get a quick check on both of your experience coming in when it comes to being on chain or being involved in crypto. What was your experience prior to jumping into Bitwise and being heavily involved? Go ahead and jump in, Cam, because you were just going, and then jump over to Ryan.
Yeah, I mean, my experience, I really started, going on chain in 2020. So I have a background in traditional finance. I was working for a hedge fund in France and started to learn more about crypto. And really, what was the eureka moment for me was, DeFi summer. And I was started to look more at okay, what is going on like all those, it was mostly on Ethereum at the beginning. So yeah, I wanted to understand a bit more what was happening there. And it was just super fascinating to me to have, you could just transfer some sort of value directly on chain from one wallet to another. You can do different type of transactions like swapping a token against another. And I was just fascinated by this new technology and the fact that, for example, initially on Ethereum, the fact that you can do everything with just smart contracts. So I initially started, for me, it was DeFi on Ethereum. And then 2021, we saw, the new layer ones, like Avalanche, like Solana, like the BSC as well from Binance. And we saw all this activity happening on chain, and for me, it was just amazing. And I was at a hedge fund at that moment, and decided to just move on chain.
That's awesome. That's a big experience. And Ryan, yeah, how was your experience in the industry prior to this?
Yeah, I love hearing Cam's story every time. So that was a great reminder of his journey into the space. I come from a traditional wealth management, asset management background. So for about a decade prior to joining Bitwise, I was working in the traditional asset management space across several different corporate finance positions, from data analytics to planning and forecasting and M&A in corporate finance. And so, I saw the asset management industry as it was then. This firm had been around for a very long time and served financial advisors, managed 300 billion in assets. And so it's a large institution. And then I discovered crypto. And of course, like many of us, I wish the first time I had come across crypto back in, the early 2010s, I had gone all in. But unfortunately, I did not do that. Eventually, kind of in 2017, I dove deeper in, started doing some trading, read, the Ethereum white paper, and dabbled here and there in crypto, basically up until DeFi summer as well. And then that was my kind of lights on moment in the crypto space, right? And I think, everything that Cam said really resonates with me. And having worked at a traditional asset manager and seeing across the traditional financial infrastructure, just how many layers are in place and how that impacted costs and margins and speed and the friction it drew, and the amount of people it took to execute relatively simple processes at all financial institutions. And then you do a transaction on chain, right? And I think for me, the moment was depositing some collateral in Aave and then taking a loan against it. And it was instant and it was clean. It wasn't cheap, of course, because gas prices back then were difficult to were high. But like, that experience was just so incredible, as opposed to the traditional experience of trying to get a loan or any other kind of transaction with a bank. And for me, that was the light bulb moment. And then from there on, I just spent all of my time thinking about crypto, talking about it with people who would talk about it with me. COVID hit, like all of that stuff was at once, and I just discovered Bitwise, saw them doing crypto asset management, which is asset management was something I was familiar with, and thought this is an opportunity that I want to be a part of and something I believe, very strongly in. And back then we were about $1 billion in assets and 25 people. And today we're about 12 billion in assets across all the different solutions that Cam mentioned, 200 folks across Bitwise in the US, Europe, and Asia. And so it's been a really incredible journey.
Yeah, that's it. There's a couple of things there. The first thing, love that both of you entered in DeFi summer. What a magical time in the early industry. APRs, APYs in the thousands, and the Ponzi's were a plentiful in those moments. But it was a very good testing ground where, although there were some very ridiculous aspects of that summer, it was hard to ignore the speed and the ability to do transactions that has now, and we can go into this a little bit more in a bit, but is now spilling over and being seen in a lot of ways in the stablecoin environment, and the ways that that's been used. I believe your CIO even spoke about it the other day, probably a couple of weeks ago, but going into even DoorDash and Meta and the ways that they're using globally the infrastructure to just cut out how hard is it to interact with banks and currencies in so many different ways. Instead of get your wallet set up, we'll deposit the money. It's incredible. And I think not enough people are realizing those kinds of shifts in the early stages are onboarding a massive amount of people that most likely never touch the industry and will instantly be completely impressed and enthralled with it being a life-changing thing for them.
Yeah, I think that's exactly right. I mean, every year, Bitwise gathers as a company towards the end of the year, and we do this big kind of multi-day offsite. And every year we look back and say, wow, this was like the most incredible year in crypto. And here's all these crazy things that happened. And we've come so far. And I think the end of this year, it will really be about stable coins, tokenizations, and the year that institutions really started to arrive. And I'm so excited about what that means for the long-term trajectory of this industry. And there's so much opportunity ahead. It still feels like we're so early on, but these are the types of catalysts, the institutions like Stripe coming into the space, companies like DoorDash integrating stable coins that you don't even know you're using blockchain rails and crypto products is kind of that step function we need for crypto to go into the mainstream. And so I think this is going to be a year to remember.
Yeah, I totally agree. Maybe just to add on what Ryan just said. Yeah, I think stablecoins has just they have there's so many very good use cases, and sometimes I was chatting with a few friends. For example, I went to Turkey, and in Istanbul, what you have is many people are actually holding stablecoins because it's a way for them to just hedge against their local currency. And the easiest way for them to get access to the US dollar is actually just to hold a stablecoin. So yeah, we see this kind of demand and real use cases around stablecoins that is just amazing to see that.
Yeah, what I was going to say, I just wanted to make sure everybody understood the two stories, just give a little bit more color, and then we'll keep moving to several regions globally to be able to deposit stable coins directly into their wallets almost instantaneously. So if you're delivering DoorDash, the joke is, before your customers even eating their food, they could have the money deposited in their account. So cutting out the ability or all of the difficulties in so many different regions around the world with companies like that, or creators in the case of Meta, them paying out so many creators, and the fact that both those professions and have people that float in and out of them. So setting up these bank situations, setting up all this payment rails just to have them leave a week later or just pay them once or pay them sporadically is a really big hurdle. It's a lot bigger hurdle than the everyday person understands or has to deal with. So I just wanted to make sure, I didn't want to assume that everybody knew the stories, and just give a little bit more framing of that was the DoorDash. I mean, those have been the two bigger news pieces on a multi-million person rollout of stable coins in different regions. I can't remember specifically which ones were which regions, but they were super cool and should be super bullish on if you're in the industry seeing big companies roll that out.
Yeah, absolutely. I think that was a great job clarifying. So happy you did it.
Yeah, sometimes I just start rolling in things and I have to take a step back and think, I don't know that everybody knows what we're talking about. And I was going to say the same thing with Bitwise, but then you jumped in talking about the size of your guys' portfolio, some of the main funds, even BitB, their Bitcoin. I think it's an ETP compared to an ETN.
Yeah. Oh yeah. Happy to talk about that a little bit if it's helpful. I guess to give the story on Bitwise very quickly is that we are a crypto asset manager. We've been around for over a decade now, and our first and largest product when we launched was the Bitwise 10 crypto index, which was a top 10 crypto assets exposure like the S&P to the crypto industry. And the goal of that was just to give traditional investors a structured product to get exposure to crypto. And since then, of course, we've grown into having more than 40 exchange traded products, which are slightly different than ETNs, but nonetheless, these are structured funds that track underlying crypto assets or indexes of crypto assets that trade on exchanges. We have private funds, we have active strategies, passive strategies. Cam and team run a wide suite of on-chain solutions, which, as Cam mentioned, over 25 different blockchains we run staking solutions for. We run vaults nowadays as well on chain. So our goal is to be the world's premier crypto asset manager. And it's really exciting now that we're doing that both with off-chain with traditional ETFs and ETPs for crypto assets and crypto equities, and that we're doing it on-chain with things like staking, vaults, yield-generating strategies, and all of that.
Yeah, there's so many. It's like as you look into it, it's like peeling the onion back. The layers are just it's just crazy. And even to see from last year to this year, it looked like, and I think the numbers might have been a little fudge, but it was about 25-30% gain in overall assets under management just in the last year, which is incredible at the size funds we're talking about here. And there are a few different things to talk about. I think I'm almost tempted to go down the USCC route first because we were talking about differentiators and unique products. And to me, I didn't know about USCC until I was looking a little deeper. And what's so different about this, I'd love for you guys to jump into this, which is USCC is the first fully on-chain fund, correct? Like you'd actually have an ERC20 if you're invested into this fund and participating.
Yeah. Happy to take that, and then Cam can add anything. Look, so what we're doing here is tokenizing a really extremely popular trade, the crypto carry trade, right, or the basis trade, where you're long and shorting using spot and futures in order to generate some yield. And Superstate, of course, launched this fund and has been a pioneer in the space when it comes to tokenized funds, which, as you mentioned, these are blockchain tradable wrappers or tokens that have a strategy inside of them. And in this case, as I mentioned, it's this crypto carry trade or basis trade. And so, look, we're really excited about where tokenization is headed. You're seeing so many traditional institutions get into the space. It's something the SEC in the US, for instance, is starting to really embrace with open arms. It feels like every single time you see the SEC commissioner, Paul Atkins, talking about anything, he's talking about tokenization. And so we think this is going to grow, and we're not alone in this, of course, into a massive multi-trillion-dollar industry. And so, this fund you mentioned is one that we are really excited about because it gives on-chain investors access to an opportunity to generate yield and arbitrage in the crypto space.
Yeah, to talk a bit about tokenization, I think this is something that we definitely see growing over the coming months and years. And what's interesting about assets being tokenized is that if you put aside stablecoin, this market actually went from 0 in 2023 to like more than 30 billion today. And you have like three elements that can also explain why this market is growing a lot. The first one is because you have many teams that actually spend years chatting with the regulators, making sure that they have a good legal framework to be able to tokenize assets and put that on chain. You also have one of the most dominant tokenized category is actually US cash equivalent, US treasuries being tokenized and put on chain. And one main reason of that is also because actually the yield environment went from close to 0.1% in 2022 to 4 to 5% today, and it just pushes people to find ways to put their cash at work, right, including on chain. And this is also why this kind of like category cash equivalent is growing a lot at the moment. And I would say the last one is just we have a friendlier environment in the US to push for crypto technology and for tokenization. I'm based in Europe, and in Europe, everyone is just looking at what the US is doing to take some action. So yeah, it's good to see this kind of approach and see how we can what are the things that we can do on chain directly. So you have different types of projects, cash equivalent projects that are being tokenized and put on chain. You have actively managed strategies that are being tokenized and put on chain, and you also have new types of credit projects that are also being tokenized and put on chain. So yeah, it's great to see this space growing, and we're very optimistic about this category growing over time.
Yeah, when looking at the on-chain economy and the intersection between traditional finance, regulation, and being able to do everything on chain, you really are leading the charge on testing some of these different, I guess, all those different realms you just spoke about, whether it's staking, whether it's different strategies, whether it's fully on chain, whether it's participating in on chain, but in traditional finance. I saw Matt Hogan say eventually everything will be tokenized. He really seems to be in the mindset of this is the direction we're going. And maybe it's good for us to speak a little bit to the Clarity Act, because that's one of the pieces that seems to be really in the spotlight. And how do you see the Clarity Act playing a focus in the roadmap of Bitwise going forward if we see that pass here in the next couple months?
Yeah, look, I think the Clarity Act is a massive deal for so many reasons. One, I think you're seeing regulation around the world, and the US is finally trying to, in many ways, catch up in terms of digital assets. And so, getting Clarity Act through the Senate Banking Committee last week and hopefully through the full Senate before the midterms this year will be a massive tailwind for the industry, not only because it locks into place via legislation clear rules of the road for a bunch of different areas of the crypto world, right? Like, will the SEC or the CFTC have jurisdiction over certain things? How do we think about DeFi and privacy and stablecoin yield and tokenization? There's so much that goes into needing this regulation and legislation in place in order for the world's largest financial institutions, as well as companies like Bitwise, to really know how we should navigate the space, right? Like, we want to do things compliance first and compliance forward. Of course, we want to be able to also be on the cutting edge and utilize this breakthrough technology that is blockchains and stable coins and tokenized assets to better serve investors and better serve clients. Because at the end of the day, that's what we are here to do. And so the Clarity Act really allows companies just to know how to move forward. It gives them peace of mind that they can make these multi-billion-dollar investments in infrastructure, in integrations, in product launches, in hiring focused on digital assets without fear that next year the rules are going to change, or in 2 years the rules are going to change again, because that's really held back investment into the space from both resources and capital from these large financial institutions over the past 4 or 5 years. So getting clarity in place and passed is really important. I think it'll be a big boost for activity and adoption across the space. I will say, without Clarity Act even in place, we've seen so many positive developments and a lot of progress in crypto from traditional institutions as it relates to stable coins, tokenization, and otherwise. I mean, you see the New York Stock Exchange working through tokenization efforts and getting a rule change approvals from the SEC. You see the NASDAQ and Kraken partnering on tokenized assets, right? You see Robinhood getting into crypto in all different ways. Charles Schwab just opened trading of crypto to its clients, and they're the largest brokerage in the world. So you're seeing progress without clarity. I think clarity just adds fuel to that fire.
Yeah, I think just Ryan said it all. Yeah, it's just you have like so many actors that were just afraid to jump into this ecosystem because of lack of clarity. So yeah, it's very important to have like some clarity and make sure that all those different actors can just have a way to navigate into. So yeah, this is very important.
Yeah, and I think. Yeah, exactly. Like, I think one thing that we say a lot is like, oh, the institutions are waiting for regulation or legislation, and people maybe get tired of hearing that or think, oh, I've heard that before. But there are specific examples of this that you can speak to that show that's actually the case. For instance, the Genius Act, which is stablecoin legislation for payment stablecoins, was signed into law last year, goes effect the early part of 2027. And once that was signed into law, you then started seeing things like MasterCard spending over $1 billion on acquiring stablecoin infrastructure. You saw CEOs of the world's largest banks saying, this is one of the highest priority items that we are focused on, is stablecoins. And so I think those are actual examples of where you had to get the regulation and legislation in place in order for them, the world's largest payment companies or financial institutions, or even other types of enterprises like we spoke about earlier with Meta and DoorDash, in order for them to step into the space fully, they need that legislation and regulation in place. And that's why it's so important and why there's so much focus and emphasis on it from those of us that are actively fighting for pro crypto regulation legislation in the space.
That's really great perspective on the Genius Act as well, because although stablecoins were always being talked about more and more and accumulating. The level of the amount of stable coins was growing and growing. It has been exponential since some of the framework has come in place. The talk tracks around stable coins, the big moves that are being made around those is very prevalent. It is impressive to watch, and a lot of people even say it's crazy because it feels like stablecoin is the thing winning most in the industry in a slower time outside of a few strategic winners, Hype being one of those, which I'm definitely interested in talking more about that. But on this subject, we had a not as friendly, and I would say we had a not as friendly administration before to the industry, and we've had a pivot with the new administration, which was I don't want to stifle innovation. I want to allow people to push the boundaries a little bit and be building frameworks simultaneously. We've got midterm elections coming up. Do you see do you potentially see if the Democrats end up taking over, how do you see that impacting the industry? Or do you feel like things have gone too far for the kind of it to be put in the bag, back in the bag at this point?
I mean, in my opinion, I would say that things have been already too far to just stop what's happening. It's just you already have so many teams that are already chatting a lot with regulators that already started to put things in place. That it's already kind of things are already happening. So I wouldn't say that even if the midterm with a change. I don't necessarily believe that this will change and really impact really the progress. We've already been quite far in what we're doing right now in the space.
Yeah, I agree with that. I think look, the genie's out of the bottle or whatever. I think I butchered that saying, but yeah, it's we've hit escape velocity, right? And that's what happens with technologies, and you've seen this time and time again over the history of new innovations and new technology is that regulators and incumbents fight it. They try to create fear, uncertainty, doubt around it. They try to regulate it out of existence. But if it's powerful enough and innovative enough, then it pushes through that and then becomes part of everyday life. It happened with fintech in the early days of companies like PayPal. It happened with rideshare in the early days of Uber. And now what we're getting in self-driving cars. Like I saw like a bunch of self-driving cars in a row today outside of my coffee shop. Right. It's like things just move so fast once you get over that hump. And I think we're going to see the same exact thing with crypto. I will say specifically when it comes to the midterms, I agree with Cam. I think that we're already having so many great conversations across the board that a change in administration or a mix up from a Republican-controlled Congress and White House to maybe a mix of Republican and Democrat-controlled, I don't think will fully change or reverse the progress that we've made. I think it could slow it a little bit going forward, but I think we've already gained those hard yards in a lot of instances, and we'll keep those. The thing about both the Genius Act and the Clarity Act, as it passed through the House previously and the Senate Banking Committee last week, is that they have bipartisan support, right? The Genius Act was like the third most bipartisan supported piece of legislation last year, right? So something that has historically been polarizing for regulators and lawmakers no longer is as polarizing and as divisive. And we're actually seeing that when you look at the votes on things like Genius Act. The same is true for the Clarity Act going through the Senate Banking Committee. You had two Democrats crossing party lines to support the Clarity Act, right? And I think when you have that kind of bipartisan support for something, it reduces the friction to pass pro crypto and common sense and positive regulation legislation through, and that's net positive. And so I think that we've gained the ground that we needed to gain in order to make sure that this doesn't go away. Now it's just pushing a little bit further.
Yeah, it was unfortunate it even got as political as it did in kind of parties drawing lines because it didn't really feel it didn't really feel necessary. I think this is a shift for the better. It's adding technology into places. It's speeding up processes. It's helping a lot of people. So I'd say, from my perspective, it was unfortunate to me that it even became much of a political issue or split by party, because it doesn't feel like it needs to be. But looking at more broad stroke, you have multiple funds. Both of you lead the research in different areas. How do you identify areas that you want to go into and eventually choose the paths you're going down? Because if you look at flagship products, you got BitB, so the spot Bitcoin, BitW, the top 10 crypto index. You got BSOL, Bava, the new hype fund, which we definitely got to go into because that's been exploding. Let's start with the higher level on this, though, which is, how do you start to determine which are great products, platforms, or investment opportunities that you want to get involved with?
Brian, you do you want to go first?
Sure. Yeah. I'd be happy to. That's such a great question, and we spend so much of our time and energy at Bitwise focused on this. So I'm really glad that you asked it, and I love talking about it. From the product side of things, our main goal is to bring the best opportunities to traditional investors, or now on-chain investors and retail investors, for them to be able to get exposure to the crypto space. Now, originally that started with just a broad-based index of crypto assets, because back in 2017, and even still today, it's not clear who the winner is going to be. And when you look at most other asset classes, the best way historically for investors to gain exposure is through an index fund. Generally passive outperforms active. So, okay, you build a passive index fund that rebalances monthly and allocates the top 10 crypto assets. From there, you start to see, where certain ecosystems or assets start to outperform others, where actual development is happening, where applications are launching and seeing traction, where value is accruing to different layers of the crypto technology stack. And you kind of look at that on one side of things. You look at the market structure for all of those ecosystems. On the traditional side of things, are there CME regulated futures or now just regulated futures? Is these assets supported by a qualified custodian that's based in the US? Can it be traded on regulated exchanges, et cetera? And then you start to think, okay, well, that seems like an asset I can wrap in a traditionally structured and regulated product, and that investors will, feel comfortable allocating to. And then a lot of it comes down to, at least on the product side, and I would love to hear Cam's thoughts around the on-chain side of things, but a lot of what it comes down to for us is investor demand. I spend a lot of my time, as does Matt Hogan, our CIO, and other folks across Bitwise, speaking with traditional investors at conferences, webinars, other traditional finance events. These are conferences like a Wells Fargo conference or a Barron's conference, or any other kind of like ETF conference, where you're actually kind of boots on the ground talking in real time to these investors and understanding, what do they want? What do they want to gain exposure to? What are they thinking about? They're also asking us what they should be thinking about, right? So you have this kind of push and pull around what's the right combination of product structure and exposure that these investors want for themselves or for their clients. And that all kind of leads into the decision. But of course, we always want to be on the cutting edge. And we're really excited about Hyperliquid. We're really excited about Avalanche, about Chainlink, these other crypto assets that we've been able to bring to market beyond the Bitcoin and Ethereum ETFs, which of course were the first ETFs that the SEC approved. Solana, XRP, all of these assets, we get asked about from different groups of investors all the time. And so just bringing all of these and providing a menu of products for them to choose from and walking them through that menu, just like a sommelier would do on a wine list, right, is kind of the role that we play. So I'll stop there, but Cam works a lot with on-chain, so I'd love to hear your thoughts.
Yeah, so on our side, on the on-chain solution side, really what we try to do is, first of all, to be aware of what's happening on the market. So we're really spending all our time, looking at new opportunities to be able to see the new networks that could be interesting. And usually what we do is we try to understand a bit more the demand. So that could that could come from, different ways. It could be from some investors. It could be from, just retail users that are using a specific chain and a product. Then we start, seeing some traction there, and we start to get interested in that specific blockchain. And usually how it works for us is that we try to get in touch with the core teams. This is something that is very important for us to understand a bit more what's the idea behind the blockchain, understand a bit more what's the value that they're planning to bring to users. And we try to understand that deeply, try to understand a bit more, also the tokenomics for validators, also to understand how to run the infrastructure, like what kind of machine you need to run the network. And when we're comfortable, enough, and after chatting with the team, comfortable enough to run the infrastructure for that network, then we do it. In the case of on-chain solutions, I would say that we're kind of like quick, because when we see the opportunity, we can easily run the infrastructure for a network. To give you some examples, Hyperliquid, we started to run some validators on Hyperliquid last year. For Avalanche, we started running validators on Avalanche in 2022. For blockchains like Solana, we started to run some validators on testnets, so it was even before mainnet. So yeah, we try to be very quick. We try to understand where the demand is, what people are talking about, and once we're comfortable enough, we run the infrastructure. And what's very, I would say, beneficial as well for people and Bitwise is that at Bitwise we manage the full stack. So we manage the stack from the ETF to the blockchain infrastructure. We run all the validators in-house, and it's just so much better because every day we have discussions between the ETF team and the on-chain team related to, for example, staking features, because some of our ETFs have staking features, and they stake directly with validators managed by us. So everything is managed in-house by Bitwise, which is quite amazing.
Yeah, let's talk briefly about that and the infrastructure and how you're getting set up, and what the advantages of having infrastructure set up that way on chain is.
Yeah, I mean, the advantages is really for us to be, first of all, direct contact with the ETF team. It's really, we have just daily conversation with the team, and it's just so much better than working with a third party where you don't necessarily know when the third party will reply to the answer. Here internally at Bitwise, we have more than 30 engineers that are working on just running the infrastructure and making sure that everything is maintained, well. So yeah, we're like comfortable with how we manage the infrastructure, how we manage the keys, making sure that we have a good uptime for on our validators and for our clients. So it's really this. It's really the fact that you have everything in house. You have daily conversations. It's really easy to internally to get in touch with an engineer and ask some questions. And for staking features, our research team is always available to reply to any questions that our clients have, and whether it is externally or internally. So yeah, it's just way better.
Yeah, I could not agree more. I mean, there's so many benefits to it, and Cam nailed it on the head. The ability to just have those conversations in real time every day it is really magnificent. And that vertical integration gives us a lot of scalability that I think other asset managers perhaps don't have. I will also say the way that translates to the end investor is both a better experience, as Cam mentioned. We are reachable by our investors. You can email us at research@bitwiseinvestments.com, and Cam or me or someone on our team will literally answer your question. And you can be speaking with, the folks that are actually staking these assets within these ETFs on behalf of you as an investor. I think that's very powerful. But the other way that it shows through is through returns to the end investor. Every layer or third party you strip out of the stack for these products removes costs. And that removed cost allows us to lower what we charge for managing these funds, which means that the investors get more of the return and they pay a lower fee overall for that return. And so really for us, this is our way to create the best products by managing these things in-house and provide the best experience to investors, whether that's being able to get answers from us directly or being able to pay lower fees for access to some of the best opportunities that crypto has.
Well, and those are, hit the nail on the head there. Providing better returns, providing better opportunities, and ease of access, taking the heavy lifting on what can be a daunting industry and getting people exposed and getting them comfortable with these new forms of investment that do make a lot of sense. But I totally understand, if you're on chain a lot, you understand how it can be a lot scarier than people realize. Even I think a lot of us get numb to how many people are trying to hack you, steal your funds, send you a bad link. There's a there's so much more than in any other thing I've ever done in life. You almost become numb to it, but there's constant barrage of attempting to get to your funds in a million different ways when you're in communities and things on chain. So it's amazing to have abilities to get to that with people that know what they're doing, can get people comfortable. And then at some point, maybe it makes sense for them to try something out on chain, or maybe it never makes sense. And this is the way they want to be exposed because they don't need to do something on it. They just want to participate in what they believe is going to continue to evolve.
Yeah, I think that's exactly right, Brandon. And when you think about like a financial advisor, right, which a lot of who we serve are wealth managers, and we hear horror stories all the time, which are sad for us to hear, but we're happy to be able to help in the way that we can. But we'll be reached out to by an advisor who has a client who has crypto assets and was scammed, right? And as an advisor, as a fiduciary who's supposed to protect their clients' financial interests, like this is something that's a big problem for them, and they want to be able to protect their clients. And so providing the structures and the products for those wealth managers to bring clients' assets in-house under their purview in a regulated, secure format that looks just like any other ETF that they would own, a gold ETF or a equities ETF, right? That's a very powerful thing. And it's not just more powerful because we launched the products and we want people to buy them. It's more powerful because you get access to institutional grade custody, institutional staking, audits, proof of reserves, regulation. You can do it in your brokerage or advisory account. And so, the surface area of risk is just lowered overall. And for a lot of investors who aren't comfortable on chain or managing, hardware or software wallets or private keys and public keys, it's just there's a high level of comfortability of using these products, and I think that's very powerful.
Yeah, maybe also to add on that and tell a bit more on the on-chain solution side, really for us is we're taking security very seriously, and we have a very large team of engineers, more than 30 engineers that are actually managing the infrastructure and monitoring everything. So we have, engineers a bit everywhere around the world that can, easily, manage the infrastructure. And the fact that you have, such a big team that can handle, more than 25 blockchains, that this way is also very, very powerful. So yeah, for us, we are taking, very seriously security.
Security is super important, and it's, well, especially with AI and everything involved these days, having people who really know what they're doing can save you a lot of headache, a lot of stress. And we're hearing some horror stories day in and day out of how quickly people can get to different funds or prompt inject and things like that. So amazing to hear that you put a lot of emphasis around security, because you can't be secure enough when it comes to finances. And like you both mentioned, comfort is something that in a stressful environment, when people are dealing with their money and they're taking chances, whatever that chance is, whether it's conservative or a bigger chance, whatever the risk tolerance is, to feel comfortable and feel like you can rely on a team, that you can trust a group of people, you can ask them questions. It means a lot. And I come from I was in the advising world early in my career, and you get a lot of experiences, and you're dealing with a lot of emotion with a lot of people. So comfort, security, and access to people to talk to is night and day. It makes so much of a difference. So it's awesome to hear you take that so seriously.
Yeah.
One thing I wanted to move into, two things. I think, or I'd love to go into two things. First, the new hype fund you rolled out. There's a lot of Avalanche community here, and we're going to go into Bava next. But I think as a whole, Hyperliquid has been a staple of conversation, and it continues to grow and grow. The amount of people that are spending time talking about it, getting access to it, just the growth of it. I think I saw just recently over $50 billion of volume a week now on Hyperliquid. When you look at something like that and you're entering that, talk us through the process. It sounds like you got in a little bit earlier. It's not like it's just got on your radar in the last little bit. How'd the research look? What really made this a winner for you? How do you even see? The reason I mention it this way is, do you think that this is the direction a lot of things are going, where this isn't just a moment? This is actually, Hyperliquid is the beginning of a structural shift. I'd love to get your thoughts on that.
I have a lot to say too. I have a lot to say about Hyperliquid. So regarding Hyperliquid, I started to learn about it in early 2024. And at that time, it's because they were launching pre-launch tokens where people were able to trade perpetual futures on pre-launch token. Another product that was very interesting with Hyperliquid was this HLP vault, where people were able to deposit stablecoins on this vault, and the vault was market making on different pairs to provide liquidity. And we saw on the on-chain solution side, a lot of traction around this kind of product. And at the moment of the launch, they started to talk about decentralizing the network and onboard some validators. So we started to look at this, started to understand a bit more, the community around Hyperliquid, to understand a bit more, the traction. And we saw that actually the traction was super amazing, from different people from the community. And so what we did on our side is we started to do a tech due diligence on how to run a validator on Hyperliquid. And I would say it was quite challenging because on Hyperliquid, the validator set is quite small. Right now it's 24 validators, but before it was even lower than that. So the stake that you need to become an active validator on the chain is quite meaningful. It's like multiple millions of dollars in hype. But yeah, on our side, we did the work. We were able to join as a validator on the blockchain, and we officially joined last year in September. So right now, yeah, we are one of the largest validators on the network. And to me, I would say, Hyperliquid was mostly very crypto focused initially, and really something that changed everything to me was in February when they started to add commodities, and with the conflict in the Middle East, people started to trade commodities directly on chain. They were able to take some position directly over the weekend on oil, on gold, and this was like the moment that changed everything for Hyperliquid. I was actually looking at the volume this month in May, and right now you have 34% of the volume that is non-crypto related, which is amazing for an exchange like Hyperliquid that is built on the blockchain. And usually I have this question, which is, okay, but why would I, trade on exchange like Hyperliquid rather than a centralized exchange if they add 24/7 markets? So the thing with Hyperliquid is simply that, first of all, it's transparent. Everything is visible on the blockchain. So you can just don't trust, verify. You can see everything happening on the blockchain. The second thing is that you self-custody your fund. So to avoid, risks such as, what happened with FTX, that, take the funds of the users to do something else. You don't have this kind of risk with Hyperliquid. And the third thing is just that it's permissionless, meaning that you have any team that can just come and build something on the network itself. And for example, you have this HIP3, which is you can launch any type of market. This is extremely competitive. And right now you have, the leading, I would say, team right now is Trade.xyz, but it's just that you have, so much competition that in the end you're able to have one of the best products. So the fact that you have this kind of, blockchain architecture that is totally permissionless, where anyone, any team can just come and try to build a very good product is just amazing to me. So yeah, for me, the big moment was with commodities. Now we have stocks, we have pre-IPO tokens as well. We already have Tesla that is being traded on Hyperliquid as a pre-IPO perpetual future. And yeah, this is quite amazing to see this.
And before we jump to Ryan, can you explain HIP3 just to make sure that nobody, as we run through these things, if we have any words or topics, just to make sure everybody's clear on what we're speaking to?
Yes, so HIP3 is just a way for teams to actually launch a perpetual pair permissionlessly on Hyperliquid. So what they do is they take care of everything, launching the pair, launching, how they plan to manage the oracle, how they plan to, handle the fees, and they're also taking care of liquidity. So it's quite challenging in the sense that you have to take care of everything, including the liquidity. So you have to have some sort of connection with market makers to make sure that your pair is quite liquid, and making sure that users are able to trade on your pair in a good way.
Okay, yeah, makes sense. That makes sense. Ryan, any comment on your behalf on that?
Yeah, look, I mean, I think Cam did a great job of covering the bull case for Hyperliquid and Bitwise. Beyond just the on-chain team being very early in terms of running validators and understanding the network, one of the things that Bitwise that I love that you won't get at a traditional asset manager is that everybody at the company uses crypto. Like so many people actually use Hyperliquid at Bitwise, not just on the research team. Folks on our distribution team, on our marketing team, our executive team are using these networks for different things, right? And so, the reason that we wanted to launch Hyperliquid as an ETF was because we saw the breakout growth that it was having. This is an asset that launched less than 2 years ago and has grown into the 10th largest crypto asset, which is incredibly difficult to do and incredibly remarkable. And that only happens if you have product market fit like Hyperliquid has. And so whether it's the perpetuals or the spot or HIP3, which basically turns it into a decentralized derivatives platform, all inclusive 24/7, 365, which then extends to, as you guys mentioned, traditional assets. Then you have HIP4, which is an upgrade that was as recent as earlier this month, which enables prediction markets on Hyperliquid. And of course, prediction markets are a massive and very fast growing area of not only crypto adoption, but in general, fast growing technology. And so we saw all of these things happening on Hyperliquid. We were asked about it from clients, right? Again, we go back to like, why are we launching these things? Well, part of it is client demand, and part of it's what we're seeing happen on chain in the market or otherwise. And so all of those things came together quite nicely for Hyperliquid. The ETFs have done remarkably well as a category. It's something like 1% of Hyperliquid's market cap has flown into these spot Hyperliquid ETFs over the past week. It's not quite 1%, but it's close. And it's a remarkable amount of traction. It's not as much dollars in terms of inflows as you saw Bitcoin ETFs, for instance, but you can see in the price action of Hyperliquid this week the impact it's had on price when you have that level of demand coming through ETFs to buy Hyperliquid. And then, of course, Bitwise is using a portion of the revenue that we generate to buy Hype and hold it on our balance sheet as well, as our way of both, conveying our conviction in this asset and in the thesis for Hyperliquid, but also to align with the economics and the Hyperliquid community, which is, in large part around the 99% of Hyperliquid fees are used to buy and burn Hype tokens. And so, there's a lot of really interesting stuff to unpack there.
Yeah, that's so interesting looking at the way you've set it up. And obviously, we're not going to talk price here, but not a bad time to get hype last September, rolling up to now. It has been an up only chart. The growth and the marketing, the word of mouth. You go on CT and you type hype, every big name down to the smaller account, they're putting a post out about hype. Everybody is on the train. And my first experience ever in participating in a pre-IPO, I had my first experience ever pre-IPO on Hyperliquid, and then it converts it to the actual thing when it goes live. And I thought that was so interesting to look at trading on the front end. And you guys are talking a bit about that, but that's such an interesting evolution. And I perfectly transparent. I don't know if that's something that happens in the traditional market and I just missed the boat on that existing. But to me, that was a completely new thing that I did not even know. And with multiple IPOs, massive, the most massive IPOs we've ever seen, and multiple of them happening this year, it's a very interesting market to be able to participate in.
Yeah, it's incredible. I think we're on the frontier of technology here in a lot of different realms: tokenization, 24/7, 365, trading, stable coins. All these things that we've spoken about are, I've never had more conviction around this being the future of finance, and I think Hyperliquid is definitely one of the key pillars of the future of finance.
Yeah, I mean, I totally agree with that. And to also mention something about pre-IPO, yeah, I think, as you said, Brandon, I think access is actually, something that makes a difference. The fact that you have, anyone that can access, a blockchain and be able to get access to those, tokens that everyone is talking about, those pre-IPOs that everyone is talking about is something quite powerful. So yeah, it's great to see this happening on chain, on the blockchain. This is quite cool.
Yeah. Now, the moment a lot of the audience has been waiting for, the Avalanche community has been showing up and they've been all about Bava and what's been the partnership that has come in with Bitwise. Bitwise has been fun with their posts. They've been having fun. It's been a fun, engaging thing, but there's a point where you also want to have a little bit more of a conversation, meet the team, understand exactly why you loved Avalanche, what made you come to this decision when you're making such amazing calls with some of these other funds. We just talked about Hyperliquid, the most recent one. Obvious move, amazing move, but would love to get your perspective on, when doing the research, why Avalanche made so much sense to get a fund around.
Yeah, I'm happy to take that one. Look, one thing that we get asked a lot about from investors is which L1 or which blockchain or which token or whatever should I invest in, right? And what we say time and time again is it's difficult to pick winners in a new space. If you go back to the early age of the internet, you could have bought Google or you could have bought, pets.com, right? And so it's hard to know. But what is easy to see is that blockchains and networks that have unique structures tend to have a level of differentiation that is valuable over the long term. And I say that because, Avalanche has a very unique structure as opposed to other blockchain networks and competing L1s. And we think that is positioned Avalanche very well for being one of the leading platforms moving into this next stage of crypto adoption by businesses and governments and other real world use cases. And so, that's why we were so excited and remain so excited about Avalanche, is that we think it's large network, its unique structure, and its customizability but scalability combined into this really strong product offering that institutions and governments and businesses will adopt as they embark on and scale up their crypto journey.
Yeah. So regarding Avalanche, I think at Bitwise we're really excited about cutting edge technologies, and in the case of Avalanche, it has this very unique structure. Where you have like this kind of like multiple blockchains with the Avalanche layer ones. And what's very interesting with Avalanche is that so they are more like focusing on the institutional side of the business, and we see some like very interesting tractions on the Avalanche ecosystem. To give one example, there is this big news that happened earlier this year in 2026 with Progma, which is one of the largest tokenized platform in Japan. They're backed by the largest Japanese banks, and they decided to create their own Avalanche layer ones. And when you try to understand why they decided to do that, it's for a few reasons. The first one is because of subsequent finality. So you can, the transaction can finalize in less than 2 seconds. The second one is because they can have a permission validator set. And this is something very important, for financial institutions to be able to understand who are the validators that are securing the network. You have EVM compatibility, and you just have access to a very large ecosystem via the native Avalanche messaging protocol. You have this access to this large ecosystem. And Progma is bringing 2 to 3 billion in tokenized asset to the Avalanche ecosystem. And what's interesting with Avalanche and Avalabs, AvaCloud, is that they have this strategy of, especially AvaCloud, to actually be this kind of partner to create Avalanche layer ones for any kind of enterprises. So these enterprises don't necessarily have to focus on the infrastructure and the tech itself. This is managed by AvaCloud, and they can just come and just have the all the different I would say, component and parameters than a blockchain can bring. So yeah, for us, it's just, we're very excited about the cutting edge technologies, and Avalanche is leading this way with, what's happening on the ecosystem with all the Avalanche layer ones and so on.
Yeah, it's amazing to hear externally. I think we talk a lot internally within the community, hearing from the team, things like that. But it's really fun to hear, especially from people who do a lot of research around a lot of different products, services, platforms, chains within the cryptocurrency space, the blockchain space, to hear in-depth research coming to the conclusion that this is what you view as a winner in the space going forward, as somebody that's got the right infrastructure, the right speed, the right cost to build out. When you look at things like Bava, does the research ever go into, or as maybe as a future state, the application layer, going deeper into what's being built on top of these chains? What does that look like in the future for Bitwise, or is that something that's already being looked at, like the level of build and applications being done on the chains?
Yeah, I mean, that's definitely something that we look at when we're evaluating blockchains and ecosystems as a whole, right? Because it's one thing to have a different structure, or a novel breakthrough in how you approach one element of how the blockchain runs, whether that's speed or security or consensus or cost. But if no one's using it, right, or if use is relatively limited, then you're either very early and onto something great, or you haven't found product market fit, right? And I think so. We do look at things like level of application use, active wallets, which can be a messy metric, stable coin velocity, stable coin supply, DeFi applications. As I mentioned before, Bitwise team members are avid users of these networks. And you can tell in many cases when you go and use a blockchain, if you're onto something new, or if they've just replicated something that other blockchains already have done, already have a moat on, already have traction on. And so we look at all of those different things. We certainly look at the capital market elements of these blockchains as well, what kind of liquidity the underlying token has, where that liquidity lives, how much of the market cap is traded on a daily or monthly basis. The same kind of things you would evaluate when looking at traditional assets, we like to use when evaluating crypto assets. And I think developer activity and usage and fees and stablecoin and tokenization supply, and all of those things are part of those core metrics that we pull into the broader picture of how we value an ecosystem and the long-term growth that we do or don't see for an ecosystem.
Yeah, I mean, Ryan said it extremely well. So that's definitely something that we're looking at. It's very important because, the market is changing very, very rapidly. So it's very important for us to be aware of like what's happening on all those different blockchains. So yeah, this is definitely something that we are looking at. What are the new applications that are building on top of those new blockchains? What are the different metrics? It's a lot of on-chain analysis, and really the goal for us is also to provide insights for our clients so that they can understand a bit more, the different blockchains that we have in our portfolio. So yeah, this is something very important for us.
Yeah, and I would just add, we have to do it, right? Like a lot of times you see on Twitter, people getting frustrated that there's not an ETF yet for a certain crypto asset, right? And the reality is that it costs money for ETF issuers to launch an ETF. Can't mention we have dozens and dozens of engineers who build and stand up and operate and maintain this infrastructure. We have lawyers and portfolio managers and operations team members, et cetera, that all work on the launch and continued support of these funds. And so you have to do that due diligence, right? You have to see, is there long-term viability of this ecosystem? Are they seeing traction in both the use cases, and is the underlying blockchain secure and novel, and can it scale? So you have to kind of put that entire picture together to understand whether it's worth an investment as a business to stand up an ETF or staking solutions or both around a product. And so I think it's really important to do that level of due diligence before bringing something to market. And Avalanche is one of those assets that certainly cleared that hurdle pretty early and pretty easily. So we're really excited about it.
You'll love to hear it. When looking, just to really break it down, can you walk us through why a DAT, what a DAT is specifically, and then what is this investment tool, like more in depth on the back end, and then the caveat on top of that for the audience, anybody listening in, who does it make sense for? Like, who does it make sense for to be involved with this? Like, why would somebody like Bava make sense for my portfolio? Bava makes sense. What are you telling the advisors out there, the people out there when you have those meetings?
Yeah, so I'm happy to take this one. I spent a lot of time talking to advisors or folks on Wall Street about investing in crypto. And so there's a number of things that are taken into consideration when talking about should an advisor invest in a crypto ETF, right? And so Bitwise launched an Avalanche staking ETF. There are digital asset treasury companies that exist that buy and hold these crypto assets on their balance sheet. These are publicly traded companies that own these assets on their balance sheet kind of as like a pass through, and investors may want exposure to both, or they may want exposure to one or the other. We're here to help them make the best choice for themselves as investors or for their clients. And the beautiful things about ETFs is that they're remarkably simple and efficient vehicles. It's why the ETF industry has grown from 0 to 20 trillion over the past 30 years in terms of assets under management or assets in ETFs, is because it's an incredibly efficient and strong product for traditional markets. And so you can know if you're buying an Avalanche ETF, every dollar that goes into that Avalanche ETF is being used to buy AVAX tokens on the back end and then stake a portion of those tokens for additional yield. And it's a very straightforward interaction. You can do that in your brokerage account. You can do that in your Roth IRA. Advisors can do that in portfolios on behalf of clients, and it fits into their infrastructure in the same way that other ETFs would. So once they understand that, you start talking about, well, you could also invest in Avalanche directly with a centralized crypto exchange or in self-custody, but that introduces a bunch of complexities that don't fit into your workflow or you possibly can't do for compliance reasons. Okay, so maybe that's out. You could also invest in a digital asset treasury company or a DAT, as you mentioned, right? But that's going to have different nuances than an ETF, right? You have other operating costs of a digital asset treasury company. The value could trade at a discount or a premium to the underlying crypto assets, right? And maybe that's something you want to take on as an investor, or maybe you don't want to hold spot crypto ETFs, and so you'd rather just hold equities like a digital asset treasury company or a publicly traded investment vehicle for underlying crypto asset. And then in some instances, there's investment mandates that these investors have that don't allow them to hold spot crypto assets. I spoke with an endowment recently who has a policy against holding spot commodity ETFs, regardless of if it's crypto or gold or some other commodity, right? And so for them, they have to find a different way to invest in crypto assets if they want that exposure. That could be through credit offerings of digital asset treasury companies, right? Strategy, of course, is very well known for coming up with a bunch of really creative and pretty smart offerings for debt and equity investors that will allow them to get proxy Bitcoin exposure without holding Bitcoin directly as an investor because their mandate won't let them or because they don't want to. So anyways, I take a step back and say there's so many different ways to access crypto. We help investors understand what the right way is for them, given their investment mandate, their benchmark, their policies, et cetera. And then the question becomes, well, how does it impact their portfolio? How much should they allocate? How often should they rebalance or not rebalance? And that's when you start looking at things like correlations to other assets in their portfolio, their risk tolerances. Are they risk neutral, risk averse, risk seeking? What is their, what is their investment time horizon, et cetera? And you start thinking about things like that. And through that entire conversation with financial advisors, you go from them asking, what is this thing, to them knowing whether they want to invest or not, how much they want to allocate, how they want to manage the position, where it fits in their portfolio, what vehicle they buy, what they sell to buy that asset, et cetera. And that's the journey that we go on with financial advisors for crypto assets like Avalanche or like Hyperliquid. And that's really how we, kind of prove our worth in terms of being a crypto partner to these investors who don't spend that much time thinking about crypto, right? They're managing portfolios of all kinds of different assets. And so we're really there to help them understand what these assets are, how to get exposure to them, and then how to think about them in the broader context of their entire portfolio.
No, very well said, Ryan. Maybe to add a bit on the on-chain solution side, because on our side we're mostly focusing on staking, and as Ryan said, really the thing with ETFs is that it's extremely simple. You have exposure to a specific asset, and then when it's a proof of stake blockchain, you can get exposure to some staking yield, which is the base yield for a specific network. In the case of DAT, that also are focusing on assets that are on proof of stake blockchain. Usually what we see is that these companies are trying to outperform the staking yield. And by doing that, it's like different type of strategies. So it could be staking, they could stake, but it's also, putting some assets into DeFi or, putting assets into some specific protocols to actually outperform the yield of the staking rate. So you have, different types of strategies, different type of project for different type of clients and risk profile. And it's just good to see that many options for different types of clients.
It's awesome to hear the way you break things down and really fit the investment with the person and what they're looking for, their risk tolerance, all the things you hope to hear when interacting with a fund, when interacting with even an advisor. It seems like you have that same mindset, which is, I'm not here to tell you which one to be in. I'm here to find out which one makes sense. And if Bava makes sense, then we're gonna get you in there. If a different way of getting exposure to that asset makes more sense based on what you're looking for, we're going to get you exposure in a different way. And that's really refreshing to hear in an industry where, it's not all good actors. It's not all people that are looking out for the best interest of their clients or potential clients. It's refreshing to hear so many aspects of this conversation have been around security, helping people manage their funds and making sure it's okay, making sure the product matches what the risk tolerance and the interest they have is, being really well informed on what these different things are, taking the time to explain them. And even today, if we don't have HIP 3 or HIP 4, taking the time to say, no, this is what HIP 3, HIP 4 is. You don't have to just it's okay to ask the question. It's okay for us to take it back a step and say, oh, I'm used to this terminology, but that doesn't mean you have to be used to it as a consumer or a customer. Like, it's better to ask the question than to just be like, yeah, that sounds good, and just, keep fast forwarding through. So I think it's really refreshing to hear a lot of the way you take on this industry, and what you said, which rung really refreshing for me, and I'm sure the audience, which is, you're all on chain. You all spend time on chain. It's very easy to say, oh, I'm a fund that touches on chain, blah, blah, blah. And then very often we interact with people that have never gone on chain and they're involved in those funds. That's a amazing shift, because you get to actually experience where the gaps are, where the issues are, where gas is terrible, where transactions don't go through right. You have the experience to know what you're looking for.
Yeah. Yeah, I think that's exactly right. Look, I wouldn't be doing anything other than what we're doing here at Bitwise. It's an incredible group of folks to work with. The communities that we work with are really remarkable. The colleagues like Cam and others who understand these things at such an in-depth technical level. It's really remarkable. We're excited to be a part of the ecosystem, and excited for what's ahead for all of crypto. So I appreciate the kind words, and it's been great to talk about this with you today.
Yeah, and I mean, really, our goal at Bitwise is to be this bridge between, traditional finance and on-chain finance. And really, the goal for us is to help as many people to understand this new asset class, which is the digital asset class. As Ryan said, we are heavily users of, different chains, different protocols. So yeah, we are there, and really, the goal for us is to help educate as many people as possible. So it was amazing chatting with you today. So yeah, it was great.
Yeah, I appreciate both of you taking the time. It's something we've all wanted as a community to understand more about Bitwise, but also being able to go so much deeper than just purely one asset, Bava, understanding some of the team, understanding all the different vision you have for the fund, your passion you share for the research side, and making sure things are done right. It makes a big difference. I want to, before we wrap up here, actually, one of the applications on Avalanche is the Arena. They're a sponsor of the show. Want to give a big shout out to that. They have Hyperliquid present on the platform. We had a big audience there of over 100 live listeners, along with the X audience. So big shout out to the Arena. Thank you for sponsoring the show, and super big shout out to Bitwise. I had to go through, one of the few times I've had to go through the PR team to make sure that I was okay to get on a stream with. But I gotta appreciate that level of vetting. It means a lot. Hopefully, we can have you guys on again later this year, and we can see how everything's gone since now.
Thank you so much. Thank you for your time. It was an amazing discussion, and really glad to be able to talk more about Bitwise and more about what's happening on chain.
Yeah, likewise. Would love to be back later this year. Thank you for hosting us. Thank you to the Arena. Shout out to the Bitwise PR team for linking us up, and looking forward to it.
Yeah, first Ryan did that facial expression. I thought he was basically saying no to coming back on the stream. He's like, I was like, all right, no. Okay, never mind. Let me block this part. But thank you so much. We'll have I'll get some clips out. We'll make sure we catch some key moments for anybody who missed it. Again, anybody who's watching, jump on X, click a repost, like this, comment on it. The recording is on X. So if anybody missed it, that's the only way to jump back in. I will get it up on YouTube. I will get it up in some other formats for anybody who wants to go back and watch. But huge shout out to Ryan, huge shout out to Cam, and everybody have an amazing weekend, and we'll see you all soon.
Thank you. See ya.